We got some big news this week. The Federal Reserve cut interest rates by 0.5%, and I want to explain to you what that means for you, how to take advantage of that, and when we should have that conversation. Let's first understand one thing. The Federal Reserve does not directly affect fixed rate mortgages. When they cut their interest rate, it lowers rates on home equity lines of credit, credit cards, all business and commercial lending, which is a huge thing, car loans, boat loans, and that's how they stimulate the economy, and adjustable rate mortgages. That's the only, but for fixed rate mortgages or bonds, and let me show you what I mean, because the Federal Reserve just cut, but mortgage rates have been trending down all year, and they're going to keep going down. Let me show you what I mean. This is Mortgage News Daily. Look at a couple of headlines. Yes, mortgage rates really did move higher after the Fed rate cut. Bonds lose ground despite large rate cut. Like I said, mortgages or bonds. Now, did they lose a lot of ground? No, they didn't. They went from 6.11 to 6.15 as an average on a conventional loan. So they pretty much held flat. They held steady. And I'll bring in just one of my competitors just to show you. Rocket Mortgage, today's interest rate, the 30-year fixed, 6.2%, and that's at a 2-point cost. Points are prepaid interest. I also want to bring in and show you the mortgage-backed security chart, just so you can see as these bond prices go up, rates are going down, and you can see the Fed cut, and they actually lost ground a little bit. And in reality, they're holding their own. So I want to talk a little bit about what that means. Okay, so number one, if you've purchased in the last 2 years, for all my clients, I'm going to be reaching out to you over the next few weeks, probably leaving you a voicemail message, maybe sending an additional email or text message to let you know we need to start tracking your house for a refinance, a rate and term. That means just rewriting the note into a lower rate. But with rates trending down, we want to make sure we do what's called a total cost analysis. And what that means is I plug your current mortgage with your taxes and insurance. Again, I plug it into the new mortgage. The new mortgage does have some closing costs. We have our rate protection program, so there's no lender fees, but there's still title. You have to set your escrow account. And we want to look at, hey, once we do all of that, on a side-by-side comparison, how much do we save? And do we want to do it now? Or do we want to set a target interest rate over the next 6 to 12 months to hit and do it then? You don't want to refinance now and let rates drop another percent and then want to do it a year from now again. You want to try to make sure you're making the right decision. You can do more than one refinance, but the key point is doing that total cost analysis. Don't get sucked into an advertisement. Don't call the person servicing your loan right now. I know we service, but if it's one of our partner servicers, don't call them. They're not going to give you any of that kind of advice, and you can end up making a bad decision. Now, the other thing is if you bought prior to the last 2 years and you have a 2, 3, or 4% interest rate, but you have other consumer debt and a ton of equity, we have great home equity loans we can get to consolidate that other credit card debt, other consumer debt, maybe pay off a car or student loans if you have a lot of equity. So more than 2 years, you typically have a lower rate and lots of equity than a debt consolidation loan. We can do those as well. But let me tell you, all year long, I've been predicting I've been predicted that prices would rise 5%, and they have. I've predicted that rates would come down, and they have. And I've also said that as they start to come down, it's going to spur buyer demand. So this is important for you guys that are looking to sell and buy, or if you're looking to buy, like you're renting, you want to buy. If you want to buy a new home, it actually is the time now. Let me show you why. So look where rates were at. The average rate. I just showed you the average rate, right? So it was over 7% in May. And look, there's a direct correlation to interest rates coming down, and which is this sort of orangish line, and then the blue line, the mortgage application index. You can see there's a direct correlation, and then boom, going up. So as rates have fallen, mortgage applications have gone up. And what that is, that's what's known as a forward-looking indicator. And what that means is it's forecasting into the future what rates are going to look like. So demand is on the rise. There's one thing that might keep it a little bit muted, is that in a presidential election year, it is normal through October through December to have lower than typical activity for as far as what they call seasonal demand. But when we get past the election, regardless of the results, the market's going to drive this. The results won't drive it. What's going to happen is rates will continue to come down because the fixed rate mortgages do trend after the Federal Reserve. So even though they didn't change yesterday, because they were already expecting that cut. As the Fed's already said they're going to continue to cut, as they do, mortgage rates will continue to drop. And the more they drop, you just saw that chart, it will spur demand. And you want to be in a position right now where you can sell your house and make a contingent offer, and sellers will take an offer and let you sell your house. It's going to be a lot harder if you've got 10 people trying to buy the house. Right now, sellers will typically pay closing costs. They'll pay title. You don't have to do an appraisal waiver guarantee. All of the things you'll have to do in a multiple offer situation, you don't have to do that in almost all cases right now. So get with me if you have any family or friends or anyone looking to buy. Have them reach out to me. Best way to connect with me is send me their name, their cell, and their email. I'll reach out. I'll take great care of them for you and build a great mortgage plan. And I can do the same for you. So I hope you found this helpful. It's Todd Baker, DFW Mortgage Master. If you're watching this on YouTube, hit the like, hit the subscribe. Love your support. And like I said, reach out to me anytime, and I hope you have a great day.